You know, I think in difficult times or in any time, you should have a sort of rough process to the way you invest. And it's pretty simple, but you should be able to write it down. And even large professional investors sometimes don't do that. I'm working with somebody at the moment. I said, why don't you write down what you do? Because you're going to need it during periods of volatility. I did this recently with a bunch of students. We looked at the future fund and we looked at what they believe they should do, and we looked at their portfolio and we debated whether they're following their beliefs or not, and whether a high cash weighting makes sense for them as an investor. I don't know anyone's individual situation, but what I would say is diversification is still a powerful tool. You still need to have some element of diversification in your portfolio. Cash gives you that, and it's a question of the degree to which you want to move up or down in the cash rate. And so I think it's got a role to play, but it depends on your risk profile. But bonds also have that role to play, and I'm here for JCB bonds, but you know, an active bond manager who can navigate through this environment, I think, is also an important component to a portfolio. Just on cash generally, if I could just broaden it out for 1 second on the monetary thing, I'm kind of shocked that central banks have gone negative on rates. And the reason I'm shocked by that is not because it's kind of the next step, but they're in the game of changing inflation expectations. And if every day you go to your bank and you get told that you've got negative rates, surely that compounds the thinking about negative rates, negative inflation, deflation. I think they should get to zero and then try some other tools. And the reason that's so important, and this is, Vimal mentioned this, is that we are now about to experiment with a change in demographics. I ran into Olive Rahn just before at the start of this. I don't know if you know Olive, but he's one of the great investors. And Olive did me a big favour. A, he employed me at Bankers Trust, and B, in my first 3 months, he asked me to do...
You can stop there. You're happy with that?
No, well, he's happy with that. But in the first 3 months, he asked me to do a study on demographics, which I've essentially used for the following 30 years. And I remember, roughly speaking, in 2010, the demographics would get relatively ugly for everybody. And the thing about demographics is, just to be absolutely clear about this, is that we've never in history run sophisticated economies with sophisticated financial systems through declining populations. It is a truly unique event. And just to give you a sense for that, the example I've given for a long time, and now people listen to it, is if you have 10 houses in the street and the population's growing as it is here in Australia, all houses get bid up. If you have 10 houses in the street and the population's declining and Mrs. Smith dies, her house is in perfect condition, what's the value of the other 9 houses now that Mrs. Smith has left and there's no one to buy it? It affects all asset prices in strange ways. And I think what they should be doing, and this is a policy view, is that they need to target policies to deal with what happens with poor demographics. For example, if you know your population is going to decline like it is in Germany and has been in Japan for a long period, and it is in South Korea and it's going to in many other places, you may have to fix the asset side of the balance sheet, as you said, monetize, for example. Now, I think Japan has pulled a trick here. They've monetized their government debt. Everyone says the debt's too high, but they've actually printed money and monetized it. Only the first person will get away with that. Other people down the track won't be able to pull it off. And so it's a lack of creative policy thinking about what to do about negative demographics, and it should not be underestimated. On the positive side, there are a few countries with great demographics: India, Indonesia, some Latin American. And I'd like to see the IMF focus on those guys and help them grow their economies, because they've got to be the powerhouse for the next period. And so it's a long answer to your question about cash, but it's a real policy question because we've never experimented before with such a tough demographic environment that can change the way asset prices behave. And just the last thing, that house example I gave, to try and colour the example, about 15, 20 years ago, I used the example of Tasmania that had a declining population, and I showed that the housing market was terrible. It was a terrible piece of analysis, but house prices don't work when demographics don't work. And our house price is partially going because our demographics are good, i.e. inflows. And I think that's an absolutely crucial thing to understand.
Okay, so Japanese vacancy rate's up around 15%, so somehow they need to destroy their housing market and reduce the supply, which would be interesting, which is abandoning houses, pushing them down and getting the supply back. So it's extreme. There's different policy measures to what we know.
It's an absolutely necessary set of policy changes because, and then there's some other things we need to do. Here's a question for you. If we looked at Japanese GDP and divided by the working population, in other words, how much GDP is being created by the people who actually work, has Japan outperformed America prior to the GFC and post the GFC, or is it underperformed? And the truth is Japan has outperformed. In other words, GDP per head of whoever's doing the work has gone not so badly. And yet here we are doing all these crazy policies in Japan, thinking that it's an absolute GDP story. We need to realise that it's a GDP per person story. And the flip side is, we think we're doing great in Australia, but given how many people we're throwing at the problem, are we actually growing as well as we should be? Is it good growth? Is it quality growth? And we're also attracting a lot of people to a high cost, high labour cost environment. So these are kind of more mature policy debates that we're just not having, that are absolutely critical to reset the levers to get good economic growth over the next 5 or 10 years.